Now, bargain hunting on Wednesday saw the NSE All-Share index close higher, but the market seemed to have clawed back the gains today. I have Joshua Odebisi, a senior banking analyst at Vetiva. He joins me now to discuss sentiments in the market today. Thank you so much for your time today, Joshua. Let's look at what we've seen play out in the market this week.
Well, thank you for having me. So I think, like you mentioned, there's been a lot of bargain hunting, but, most of the sentiment has been around, the earnings releases that we've seen. Obviously, there was the sort of negative reaction to UBA declaring, a lower dividend. We've seen some of your FMCGs, your Dangote Sugar, for example, coming out with some very strong results and also declaring good dividends. But overall, I think it's been a bit of a mixed bag. I see that we've also had some international news with regards to MTN, although the Nigerian business did declare a pretty solid dividend year on year, and I think that overall this has improved sentiment, but there's still some issues or some uncertainties around a few of the other banks that are yet to release their own results and declare their own dividends, and so some investors are getting a bit jittery, especially in the banking space, or about whether or not the likes of UBA and FBNH are going to declare suitable dividends to keep investors happy.
All right, because I was going to get into that dividend payout and how much that is influencing how investors are taking position in some of these big names.
Yeah, well, like I said, so I think the thing about the Nigerian investor, the average Nigerian investor, is that they usually hold long term, that's the majority, and then they always look for good dividend payouts and, good dividend yields. Now, obviously, historically, we've seen those from some of the tier ones, your GT, your Zenith, your UBA have been fairly reliable with their dividend payouts. UBA's historical dividend payout is closer to 40%, is around between 38 and 39.6%. Usually, this year it's dropped all the way to less than 20%. So I think obviously the investors have just taken that as an indication, because it has nothing to do with their results really. Their results were very good. They did over 100 billion in PAT, their record results, but they said that it is a strategic move in order to ensure that going forward, depending on how things play out this year, they will probably return back to their normal dividend payout by the end of 2021 really. But I think that doesn't really appease the investor who is just looking for that solid dividend payout that is usually around the 10 to 12% level.
All right, but with this line of thinking, though, with the earnings that are still pending, how do you think investors are going to play it?
Well, I think we've seen that a little bit in the market. There's been a fair bit of uncertainty. We also have to remember that if a fair number of investors left the fixed income market because yields were, trading so low for such a long time, to come into the equity space with the promise of, fairly solid dividend yields that would at least be closer to our, inflation rate. But, inflation has gone up significantly. And so what we've seen is that a few of these investors have then returned to the fixed income space as the CBN has sort of shifted policy again and has sort of started to raise the rates at their previous auctions. And so that's really been where the push back and forth has been. So a lot of investors are still waiting around to see what your GT and your Access and your FBN will do, but a lot of them have, just preemptively left the space and gone back to the fixed income space.
All right, we've seen some banks already put out their earnings forecast at the stock exchange. For you, looking at these numbers that have come out so far, what are your expectations from them?
Well, so there's a couple of things. First of all, there have been indications, or rather there have been speculations from, the international market that there will be a sort of, pushback, or rather a relapse after the restructuring of some of the loans that happened in Q2 last year. So investors or some analysts believe that due to the slow economic recovery, we might still see some pretty high levels of stage 3 loans. And I think there was a little bit of evidence of that in the UBA results, where provisions were almost, more than 50% of the year's total provisions were taken in Q4, which is around the time when the restructuring or the restructured loans started to come good again. And so this is sort of giving us an indication that some people expect that we might start to see higher NPLs this year, unless something else happens or unless we see a pretty solid economic recovery, and that would possibly negatively impact profits. However, I'm a little bit more optimistic that there will be, with the way current oil prices are, and the way the CBN has sort of started to raise rates, we might start to see a little bit more economic recovery, and so this might not materialize, and NPLs should hopefully moderate from 2020 levels.
All right, now, yesterday we saw that big news coming into the market with the demutualization being completed. I'd like to get your assessment of how you see things playing out going forward from here.
Well, the most important thing is obviously that now that the process is complete, we are sort of looking forward to when the NSE will be listed on the on the exchange and will be, a publicly traded company. There's speculation that this will happen around towards the end of the year, and so we'll just continue to monitor that. But I mean, this is a very big positive for the market. It will, deepen the market a lot. It will issue a lot of transparency, and it will also, I think, attract a lot more investment into the Nigerian space. This, I think, is probably, one of the biggest listings we can look forward to, unless maybe, the Dangote refinery decides to list when it comes on stream. Those kinds of big marquee listings will attract even more investment into the market, and, of course, raise the value of the NSE significantly, and, continue to push us on the steady road, because I think that the Nigerian stock market has, seen a lot of interest and have generated a lot of interest. I think it's just a few issues with regards to, repatriation of funds and dollar liquidity that have really hampered the level of growth that we should be expecting to see.
But Joshua, when you look at trends and how things are playing out, though, what's your call for the Q1?
Well, I think we're going to see a bit of a mixed Q1. With the way things are going currently, we might not see some of these big banks release all of their results until maybe towards the end of the month. And if, there is any space, depending on what happens, we might see either a surge or another drop. But I think from where we are right now, it's most likely that Q1 is going to end in the negative, but not too far in the negative. And I still believe that it will pick up, as the year progresses. But unfortunately, as we are right now, I still think it's going to